Hey guys, this is Alisada. Let me bring my camera down a little bit here. Hey, today I'm going to be talking a little bit about technicals and how to identify bottoms and tops, and mostly bottoms, because that's really much easier to identify than tops are. So, and I'll go into that a little bit, but I'm going to share with you some of the technical tools that I use to trade, and this could be used for option trading. Not so much for credit spreads, just because credit spreads you need a longer period of time. However, with big moves in the market, you can identify certain areas of consolidation and reversals, and that's really what I wanted to talk about today. Okay, so I'm going to bring out my screen here fully. All right, and so what I have here is the 1 minute chart on MES or ES, either one you can use, and the 5 minute chart. And then I also monitor MNQ, which is the NASDAQ futures as well. Okay, so let me broaden this out first of all, and kind of show you. I'm going to share with you a trade that I did on Monday. Actually, it was Sunday night. It could have been. I think it was Sunday night. Yeah. So let me bring this out. So we can really see this. Let me bring this in a little bit. Okay, here it is. So here is actually Sunday night, and let me bring that more into focus here so you can see this. Okay, hold on one second. There it is, right there. Okay, and so on Friday, actually, yeah, on Friday, we had futures went down, a lot after the market closed, okay? And characteristically, when that happens, we typically have a gap down open in futures on Sunday evening when they open at 6 p.m. Eastern, right? So, so what I did, and I was getting prepared on Sunday night, and when you have these big swings down, right, usually there's going to be a reversal. Okay. And what I did was, I kind of waited for it to see how far down this market was going to go. And I actually got in right around this candle right here on the 5 minute. Okay. And so, and it's kind of like, when you're looking at this, it's easy to see right after the fact, but when you're looking at this and you see that gap down here, right? Let me go candle by candle here. You see this market that went down Friday, and then you get an open here, right? And then the next candle is like another leg down, right? You kind of have to really hold your nose and buy, during those times, because you think that the world is going to fall apart and it's going to keep going down. That's the emotion you have, right? But what I do is, what I did basically was I got in around this candle here. It wasn't true, wasn't right at the bottom, but I set a stop of 0.5 below the low of this candle, right? And so it could have easily taken me out. Okay. And here's an example here of, a big swing down too, right? So here is, this was what happened on Friday. We had a big swing down, right? And I didn't trade this one, but I'm just saying, you look at it, okay, this is good entry right here, right? And you expect it to go up, and you set your low, your stop be right here. Well, the market took it out. It took out that low, and so you would have stopped out, okay? And this can happen over and over and over again. And I'm sure if you guys have traded, any stock or futures, and trying to catch the bottom, this happens, right? And so what's important is that you set, a stop, and you're disciplined, and you just let it go, right? And a lot of times what happens is I'll stop out on several occasions before I'm able to get in. So I'll take a few losses, right, until I'm able to get in. And this one, you can see here, if you would have gotten in right at the bottom here, you could have made, several handles up in the market, and you want to, and I'm going to talk a little bit more about retrace and fibs in a second here, right? So you could have seen this, this could have been a nice move up here, and even here, even if you caught it here and you set your position here, if you're scalping, let's say, right, you could have gotten out up here, but it could have rolled back on you too. And so a lot of times what I use is I'll use trailing stops on these so that at least I'll gain something, right? So once I get in and I have a gain, I'll set the stop to break even, after a period of time, because you want to give it some room. And then, right, and then as the market goes up, you put a trailing stop in. Sometimes I'll use like negative, 4 on the ES and a little bit further on the MN on the NQ, so that you can at least capture some of the gain, right, and not take a total loss. All right, so let's talk about what happened Sunday. So we had just a push down and another push down on Sunday evening, right, and I got in. And so what I immediately did on this was, okay, so let me put in a retrace from the top to the bottom here, right? And so this is where I use my fibs. In this case, I would use a retracement here from the top of this level down to the bottom of this level. Okay, and so when I was trading this, I actually entered here and I put my stop here. And once I got up into this area, right, and this was already like 9:30. No, actually, it was around 8:30, 9 o'clock. I put my stop at break even, right? I put my stop at break even, and I just sat there. Now what happens with these fibs? Okay. What happens is that when you have a big downdraft like that, right, the market will retrace. If it retraces to the 23.6 and then goes back down, it means it's weak, and it'll usually take out the low again. All right. So you kind of have to, monitor that. And if you're looking at this, right, this thing hit the 23.6 just above it, and then boom, it went back down, but didn't, it actually had a nice candle here. So, okay, I felt, okay, there's some strength here in the market. Even though we went back down, there was definitely some strength, and we had a, higher low here, from this candle here. And so after it started moving up, and what typically happens on a big downdraft or updraft, right, it'll get up to around the 618. Once it gets up to the 618, the easy money has been made, and you'll probably want to get out. Okay, and so you can see here, and when I got out right around this candle right here. Okay, I got out of the trade, and that was like at 11:30 at night. Okay, but you can also see now that it moved back up, into this space right here to the 786, but didn't hit the 786, and then moved down, and it looked like it was going to continue moving down, right? And that's why I'm saying it gets kind of iffy after you get to the 618, and I was happy to have gotten out, with a nice profit, but after that, it kept running up and running up until and moving higher. And so if you're looking at this, you want to set some targets. You want to study the market and use kind of these targets to position yourself and try to gain something, right? Even though it doesn't meet your target, you want to try to gain something so that you don't take don't take bigger losses all the time. All right. So that's actually the trade that I did on Sunday. Okay. So, but I also wanted to share with you a little bit about ABC type of targets. Okay. And this is using, let's see where we are right now. Okay. So before I get into that, I just want to share what's happening today, right now with the market. And we did move down quite a bit yesterday. And and what happened here was that, and let me pull these, let me pull this out here. So we'll draw something fresh here. Okay, so we'll talk about it, and I'm going to take this out as well because this was yesterday. Okay, all right. What I wanted to share too is something called IBL, and so the IBL is it's an initial balance level. Okay, the initial balance level, and what that marks is the first hour of open trade in the market. And traders use this as support and resistance. Okay, so let me draw that today. Okay, and we'll look at how that's used. Okay, so this is 9:30 here. Let me bring this out further. Okay, so this is 9:30. Here's where the market opened, right at 9:30. So you can see here. So it's the first hour of trading. So from 9:30 to 10:30, okay, and that's where you want to mark. And so, and let me just draw a line here from, let's say, 9:30. I think that's 9:30, 9:25. Yep, 9:30. We'll draw a line from here. From here till 10:30. Okay, so during that time right there, just put that there. Okay, so during that period of time, let me from 9:30 to 10:30, you'll want to identify the high and low of the market. And so this is how I identify. I'll take a price level, and we open at 9:30. Market went down, and so what happened between 9:30 and 10:30? We had a low here, so this was the low of the day. So that's basically your IBL low, and that happened at 9:50 this morning, right? And then the high of the day happened. Okay, right here. So at 10:25, we had an IBL high. Okay, so now we got the low and the high. Now, this is not rocket science, okay? But traders use this now as support and resistance levels. It's kind of a dynamic support and resistance level, so that you can gauge, what's going to happen in the market. And typically, what happens is that you can trade off the IBL. So, right now, this market's moving higher, and it's showing some strength, even though it's pretty sloppy today. It's actually showing some strength, and once it hits this, and you can see I have a trend line up here. And I don't use trend lines very much, but I like to identify trends, right? And that's a good way to identify the trend. And the trend is down today, and so, but once this market hits this area, you can do one of two things. You can either short it, right? And what I typically would do, and this is hard because it's harder to pick tops, because what happens is the market generally goes up. Okay, it'll go down for a while, right? But it's much easier to pick a bottom than a top. And not only that, I'm not so worried about stops, because I trade very small in my futures. I don't worry so much about stops on the downside. I worry about them on the upside, because the market can rip right through it and continue going, and it never comes back. Okay, I mean, it happens. And so you want to always use stops on the on the upside, no matter how small you're trading. You always want to use stops for your bear positions. All right, for bull positions, when you're going long, I don't mind sometimes not even putting in a stop. Okay, and just because the market can go down 300 points, and I really won't affect me that much. Okay, So, but I still use stops, especially when I'm trading the bottom. When I'm really trying to pick the bottom, I will use stops, as I mentioned, a quarter point or half a point below the low of that day. And today, here was the low, okay? And so when the market opened, we had a low here and a very strong candle up. Today was kind of a sloppy day, so I don't like trading on consolidation days, after a big move. But this would have been a nice entry, even if you would have gotten into the top and moved up here. And again, using those techniques that I mentioned, right? So right now, this is a monumental moment here, right? It looks like we're gonna hit the IBL, and we're gonna watch this and see what happens, right? So again, you can do one of two things. I mentioned shorting, right? And the other one is you can use this as a breakout. So if it breaks out, right? If it breaks this IBL, it typically will pause here. It'll break it out. It'll consolidate. Okay. You let it consolidate, and then you can actually put in a stop, below this lower candle. Like I like to use a little bit wider spreads when I'm trading the IBL, but you can or wider distance, right, as a stop, and especially going long, I don't mind it because eventually I know I'll get my money back. And so or you can short it. It may hit it, go down. And then it continue going down, and a lot of times it'll go down to the IBL low, right? And so you have to be careful with your stops either way, right? So let me put the pointer here. Okay. So while we watch this today, right? In trading, I would have put already a high. Let me see. I would have actually taken this retrace here. So I'll go from the overnight low or overnight high here, and put a retrace and put a fib retrace here, right? So I'll go from the high here to the low here, right? So so if you look at this, right, during the day session, we went down, to this area here. But once we retrace, we only retrace back down to the 382. Okay, and then we kind of had a double bottom here on 5 minute, and then it started moving back up. So the market is showing some strength. So I would be today biased, right, to trade long. Okay, in this market, especially after we've had a nice down day yesterday, right? Okay, so the other way that you can trade this is using an extension. I mentioned using an extension. Okay, so that's the IBL, and so we're going to watch this here while this happens. And so now I'm going to pull off this. I'm going to pull off this retrace, and I'm gonna use what's called an ABCD pattern. Okay, so with an ABCD pattern, the market goes in one direction, then another direction, then another direction, and then you want to be able to identify those, where that market's going to be extended. And so these are typical patterns, okay, that occur, right? So so today we are going to go from, let's see, so we start from the bottom. Okay, so I'm going to start from the bottom here and put an extension, right? I'm going to start from the bottom here. And I do like to do this on the hourly. So that's your A position. Up to this area here is your B position. And then you want to go down to the nearest low of where it was, okay? And this is your C position. Now what happens? Okay, so we've got A here, B here, C here, and here is your extension, right? So if you were trading this, right, this actually triggers at the 618. Okay, we typically use the 618 as a trigger that it's going to go higher. And so every indication to me today is that this market's going to go higher, right? So I would be biased long. And so now what happens? Once we trigger this, and with an ABCD pattern, what cannot happen is that you cannot take out this low. Once you take out this low, it invalidates the ABCD pattern. Okay, so now you can set a target using the extension, right? So the extension on this is between 100 and 125. This is where you want to target the profit zone. Okay, and so if it does break this, this IBL level here and breaks the trend and breaks this high here, the probability of this trade moving into this area is very, very high. Okay, so so that's basically how I trade bottoms. All right, now tops are a little bit different, and it's just because, again, markets generally go up. Okay, so if I were to be trading, if I wanted to trade, let's say a top, okay, you could see here what I look for is rejection candles. Okay, so here and a pivot, and so we have a very clear rejection here of this area. And so what I try to do is I'll wait until, this goes down. I won't trade this because it can just go right back up. I'll wait to see if it goes back up some, does not take out this high, and goes back down. This is where I would put my entry. Okay, and again, you can see here, if you're trying to hold a short, it'll go down, and you want to hold it, and you want to make money. You think it's going to take out this low. What happens? A lot of times, it's going to go back up, and you can see here it went back up, and by this time you're almost at break even, right? So you didn't make any money on that trade. And so, but what happened was this established a lower high, right? And then boom, it went back down. And when you have these aggressive moves down, you want to get out. You want to get your profit and take your profit and go. All right. So many times I've let this thing go up and it's taking this out and I take a loss, right? And that's what you don't want to do. So again, trading short is a little bit more, it's more complicated. You want to be more careful. And if you're starting out, just trade the bottoms. Trade the bottoms, go long, don't do shorts, okay? And you're going to see that once you start getting accustomed to this and being able to identify those bottoms, it becomes much easier. And this is a good, one more point about a bottom. This is a good indication here of a reversal. See where the market went down, went back up, went back down, did not take out the low, and then continue going up. And this would have been, a very, very safe entry here. Now your stop has to be a little bit lower than fishing for the bottom, but it would have been a nice place here to get in on that bottom, since it didn't take out the low, and then you can see where it aggressively went up right after that. All right, so just a few things that I wanted to share with you that I use in my trading. Next time I'll use, next time I do this, I'll talk a little bit more about the RSI that I use in identifying reversal patterns. But as you can see here now, we're breaking above the IBL, okay? And we can watch this a little bit. Now, this is where traders will go short. Once it hits the IBL, they'll go short. Today, I would not be shorting the IBL, just because I think that the market is going to reverse, and it's going to continue going back up, just because it's showing strength here today. But you can see here now that right at this level, it's starting to wane. It's starting to pause here, and the reason for that is because a lot of traders are using this and they're shorting. They're shorting right now. And they may be bears, and they want to go short here, and so they'll put their stop right above this high, okay, or a little bit higher, and just see what happens, right? And let's see what happens here. So it kind of paused here at the IBL, and now we're going down a little bit, and that's very normal that this happens. And you can see here, if you're a bear, right, you got a high here, a lower high here, and possibly a lower high here, or a double top. right? And so there we go. Now it's starting to go down. And so let's look at this trend line a little bit further here. And again, I don't really use trend lines to trade, but I do like to identify identify areas of trends that I use. And you can see, look at this, like clockwork, it's going down. Now, if I were going long here, I would wait for this thing to play out, and then basically enter, goes down, and then when it breaks out again, that's what I would enter along into this position. Or you can do it early, and set your stop around here, and let this play out as well. Okay, so it's another way to trade this. And again, if you're using options, and let's say you're trading a credit spread, it's basically the same thing. And you want to identify this area of of a bottom, as I mentioned before, and then place your credit spread right at this point here, and let the market do its thing. And you'll be able to, if you're day trading, you'll be able to pick up several points here of a good premium. And when you're doing this, I don't trade that way, but I know other traders that do trade that way, and they're pretty successful at it. Okay. All right. Any questions of anything about anything that I said? This is being recorded, so if you're not here today, now, hopefully those of you who want to see it will be able to see it later on, and I'll basically produce a YouTube video on this as well. Okay. But, if you're interested, stick around and, keep looking at this, at what's happening here. It stopped cold right at the, you see it's the first red candle on this move up here, right at the IBL. Okay. And that's how powerful, this tool is in identifying areas of support and resistance. Okay. It does the same thing at the bottom. So it's just a very, very simple tool to use. Keeping it very simple, and something that you can use as a higher probability trades in your trading. All right, that's all I had for today. Thanks for joining, and hope you get a lot of value out of this. Talk to you soon. Thanks.